You've probably seen the headlines. XRP is heating up again, and this time, it's not just social media hype or a short-term pump. As of June 12, 2025, XRP is trading around $2.24, after pulling back slightly from a recent weekly high of $2.35. That might not sound explosive at first glance, but context is everything. We're talking about a crypto market that's waking up across the board. Bitcoin is flirting with the $110,000 level, Ethereum is holding strong above $2,800, and altcoins are beginning to steal some of the spotlight as institutional capital starts rotating out of the majors and into strategic positions. But for XRP holders, the real story isn't the day-to-day candle. It's the setup that's forming beneath the surface. Zoom out a bit, and over the last 30 days, XRP has traded in a relatively tight consolidation range between $2.10 and $2.30. That's a classic accumulation zone. No sharp crashes. No runaway rallies. Just methodical sideways price action that often precedes violent breakouts, especially when the fundamentals are shifting in real time. And that's exactly what's happening right now. First, let's look at the on-chain activity. Daily active addresses on the XRP ledger have surged, climbing to levels we haven't seen since late 2021. That's not just bots or random spikes. That's consistent engagement, real usage, and more importantly, real demand. When you combine that with the fact that open interest in XRP futures contracts has jumped by 47% in the past month, it's clear that traders, especially leveraged ones, are positioning for a move. Binance, BitGet, and Bybit are showing the largest increases in OI, signaling that this is a globally coordinated setup, not just a local rally. The legal overhang from the SEC's lawsuit against Ripple? Still a factor, but for the first time in years, there's actual clarity on the horizon. The final remedies briefing is done. There are no more court filings, no more procedural delays. All that's left is for Judge Torres to make her final ruling. That decision is expected before the end of July. If Ripple walks away without harsh restrictions, or even better, if there's a negotiated settlement, it could remove the single biggest source of doubt that's weighed on XRP for over 3 years. That's not just bullish. That's catalytic. Then there's the institutional angle, something that retail tends to underestimate until it's too late. Since March, institutional wallet activity on the XRPL has doubled, and a lot of that volume is coming from corridors connected to Asia and Latin America. These aren't speculative inflows. These are payment providers, remittance firms, and liquidity aggregators preparing for scale. Add to that the chatter around a potential XRP-based ETF and the fact that BlackRock and Fidelity are actively testing tokenization pilots that could include Ripple's tech stack. You start to realize this isn't just theory anymore. The building blocks are being laid, and they're not being laid for retail moonboys. They're being laid for banks, institutions, and infrastructure. From a technical standpoint, the key levels couldn't be more obvious. The $3 mark is the immediate breakout target. That's where XRP has historically struggled to gain momentum, and it'll need strong volume to flip it into support. If it does, the previous all-time high of around $3.84 becomes the next psychological milestone. But the real battleground is around $5. That's a historical resistance level dating back to the 2021 bull run. If XRP can break through $5 post-regulatory clarity, it's basically thin air after that. And in thin air, price discovery can get wild fast. So here's the takeaway. The market is setting up. The legal uncertainty is nearing resolution. On-chain and futures data are pointing to a surge in activity. And institutions? They're not just watching, they're positioning. XRP at $2.24 may feel boring now, but if you look under the hood, this isn't boring at all. It's the calm before something much, much bigger. Let's talk about the elephant in the room, or rather, the viral AI prediction that has XRP Twitter in a frenzy. A popular tweet recently made the rounds showing ChatGPT projecting that XRP could hit $27. That's right, $27 per token. The post cited reduced supply, rising demand, and regulatory clarity as the key variables. Some called it clickbait. Others called it hopium. But here's the thing. Under the hood, it's not entirely off base. Let's break it down. The AI behind the forecast used a combination of historical market modeling, macro trend analysis, and behavioral data to estimate a high-end valuation scenario. 3 core assumptions underpin the $27 price target. First, a full regulatory green light in the U.S. Second, a supply crunch driven by XRP being locked into institutional flows like ODL corridors and custodial reserves. And third, explosive transaction growth across cross-border payments and tokenization rails. Now here's where it gets interesting. The AI applies the classic network value formula. Market cap equals transaction volume divided by velocity. In this scenario, as more XRP gets locked up in utility use cases and institutions adopt RippleNet solutions, the velocity drops, which means each unit of XRP has to carry more value to support the growing transaction load. Combine that with a shrinking available float, and you suddenly have an argument for Ethereum-sized or larger market cap potential. The AI doesn't just throw out the $27 number blindly. It presents it as the tail-end outcome of a probabilistic curve. That means there's a small but non-zero chance, about 12%, that XRP could hit that number if all the bullish catalysts align. The more conservative estimate sits between $5 and $7, while the mid-case scenario targets the $10 to $12 range based on gradual adoption and possible ETF exposure. And it's not just speculation. The AI also draws real-world analogies. Bitcoin in 2017, Ethereum in 2021. Both had breakout narratives, surging adoption, and an inflection point where retail, institutions, and tech aligned. The model suggests XRP is nearing that kind of convergence point, especially with Ripple rapidly expanding its enterprise reach and the legal drama finally nearing an end. Look, no model can perfectly predict the future, especially not in crypto. But when a tool like ChatGPT, trained on millions of data points, starts flagging scenarios that align with what we're seeing on-chain and institutionally, that's worth more than a passing glance. It doesn't guarantee a $27 XRP. But it sure makes you question whether the market's sleeping on what's coming next. Let's anchor this AI forecast in something more tangible, actual market data. Technically speaking, XRP's indicators are flashing bullish. The RSI is hovering around 57, meaning we're not yet overbought. MACD momentum is ticking upward, and XRP just completed a bullish crossover on the weekly chart. That's not noise, that's structure. Now combine that with whale activity. According to Santiment and Lukenchain, wallets holding over 10 million XRP have increased their balances by 6.3% over the last 45 days. That's nearly $1.4 billion in silent accumulation. At the same time, exchange balances are decreasing, suggesting that coins are moving off centralized platforms and into cold storage or institutional custodianship. That's the kind of behavior we saw before major moves in both Bitcoin and Ethereum during their previous cycles. Quiet confidence by deep-pocketed players. What are analysts saying? Not everyone's calling for $27, obviously, but several respected names have issued revised forecasts. Standard Chartered sees $5.50 as a fair range post-lawsuit. Some analysts have modeled a path to the $7 to $10 range based on remittance corridor growth and transaction throughput. Even conservative analysts from Messari now include XRP in their top 5 infrastructure tokens by transaction utility, something that wasn't even on the radar 2 years ago. On the utility side, Ripple's expansion is a massive tailwind. The XRPL is now integrated into 76 payment corridors, including recent expansions into Africa and the Middle East. ODL volume has hit all-time highs, with over $9.3 billion settled through XRP in Q1 alone. That's not theory, that's real capital movement. Developer activity is also ramping up. Since the sidechain and hooks upgrade, GitHub commits on XRPL repositories have more than doubled year over year. The number of developers building on XRPL is at an all-time high, and we're seeing new use cases emerge. NFT issuance, decentralized identity tools, even tokenized carbon credits. This isn't a ghost chain. It's a growing ecosystem quietly maturing while the market isn't paying full attention. The bottom line? The data backs the story. We're seeing technical confirmation, institutional movement, and growing developer engagement, all converging at a moment when XRP is still trading well above $2. That's the kind of asymmetric setup that makes people look back and wonder how they missed it. The question now isn't whether XRP has potential. It's whether you're watching the signals or still distracted by the noise. But let's not drink the Kool-Aid without a reality check. We've walked through the bullish case, liquidity surges, institutional flows, and on-chain indicators screaming accumulation. But if you're going to stay ahead in this market, you also have to analyze the friction. Because markets don't move in straight lines. They twist, they trap, and they test conviction. XRP is no exception. Let's start with the elephant in the room. The SEC case. Yes, the tides are turning. Yes, the judge has already ruled XRP itself isn't a security. But let's be clear, Ripple still faces serious legal exposure tied to institutional sales. The court could still impose financial penalties, force operational disclosures, or limit Ripple's ability to onboard US-based liquidity providers. That wouldn't kill XRP, but it could clip its wings temporarily. And don't forget about the possibility of an appeal. The SEC might drag this out, even in the face of defeat. Bureaucracies rarely admit defeat cleanly. If an appeal moves forward, the legal fog could stretch for another 6 to 12 months. That doesn't change XRP's long-term utility, but it would suppress bullish sentiment in the short term. Market makers hate uncertainty, and capital hesitates when legal clarity is up in the air. Then there's the macro headwind, and it's massive. The Fed is signaling one more rate hike this year, and even if they pause afterward, the broader liquidity environment is fragile. Inflation is proving sticky. Bond yields are stubborn. And if capital tightens again, especially in Q3 or Q4, we could see money rotate out of altcoins and back into the safety of Bitcoin, cash, and stablecoins. That's not an XRP problem. That's a market-wide gravity shift. But XRP won't be immune. And this brings us to another trap: over-reliance on AI-generated models. Forecasts, sentiment maps, even technical scenarios generated by GPT-based tools or LLMs, they're useful, but they're not omniscient. They don't trade in real time. They don't account for flash crashes, geopolitical surprises, or whale manipulation. They can't feel fear or euphoria. They process patterns, but they don't experience markets. So, while AI can synthesize data beautifully, it's not a crystal ball. It's a probability compass, not a GPS. And sometimes that compass points in the wrong direction, especially when black swan events hit. Think about the Terra collapse, or the FTX implosion, or even Ripple's initial SEC lawsuit. No AI model predicted those. They were emotional, political, and chaotic. And that's what markets are: human chaos disguised as structure. But let's not stop there. Because even if Ripple wins, the macro calms, and AI gets smarter, there are still fundamental XRP concerns that demand scrutiny. Tokenomics. Ripple still controls over 40 billion XRP in escrow, released on a monthly schedule. While most of that is re-escrowed, the optics matter. If Ripple starts selling aggressively into price rallies to fund expansion, that creates sell pressure, caps momentum. And if institutions sense that Ripple is dumping into strength, it can undermine the very accumulation thesis we've been tracking. Now, Ripple has been transparent about their intent to avoid disrupting markets. But here's the uncomfortable truth. Even responsible sales can create friction in a low-liquidity environment, especially when retail confidence is fragile. Every token unlock or movement from Ripple wallets becomes a psychological drag, whether or not it affects the actual float. And then there's the philosophical debate. Does utility guarantee price appreciation? XRP's primary function is to move value, not store it. It's designed for speed, not scarcity. That means there's always a debate about whether high usage translates to high valuation. After all, just because trillions in value move through XRP doesn't mean each token needs to be worth hundreds of dollars. The system could work fine with sub-$10 XRP, depending on how liquidity pools are managed and how frequently tokens are recycled through corridors. Some critics point to this as the Achilles heel of utility tokens. Unlike Bitcoin, which thrives on digital scarcity, or Ethereum, which accrues value through network fees and staking, XRP's role is transactional. It's the oil, not the engine. And oil is cheap by design. But here's the counterargument: scale. If XRP becomes the bridge for tokenized treasuries, cross-border CBDC transfers, and real-time liquidity management for global banks, then even a fraction of that volume locked in escrow, used for staking or corridor pre-funding, could create massive supply constraints. And that's when price begins to reflect structural demand, not just speculative cycles. Still, the path isn't guaranteed. Ripple has to manage its supply carefully. It has to win trust from institutions. And it has to prove that usage drives ecosystem value, not just throughput stats. Another challenge? Interoperability competition. Stellar, XLM, Quant, QNT, IOTA, and even newer projects like Chainlink CCIP are all chasing the same goal: seamless value transfer between siloed financial systems. Ripple has a head start, but this space moves fast, and partnerships aren't permanent. If a faster, more composable protocol catches institutional attention, XRP's moat could narrow quickly. And lastly, adoption friction. Banks are slow. Governments are slower. Regulatory bodies move at the speed of paperwork. Ripple might have the infrastructure, but that doesn't mean global corridors light up overnight. Integration takes time, and time in crypto often feels like stagnation. So yes, the bullish scenario is grounded in real developments, not hopium. But it's not without resistance. The market will test patience. Regulators will throw curveballs. Competing networks will innovate. And AI will keep feeding forecasts that sound perfect until reality kicks in. But that's what makes this cycle so high stakes. Because if XRP can cut through these headwinds, if it can survive legal fire, macro storms, tokenomics friction, and AI over-optimism, then the upside isn't just narrative. It becomes embedded, structural, locked in. This is the fork in the road. Either XRP becomes the most misunderstood asset of the decade, or the most vindicated one. And how it navigates these challenges will determine which side of history it lands on. So after all the noise, all the speculation, all the AI predictions and deep dive fundamentals, what's the real takeaway? Can XRP actually hit $27? Maybe. But let's not get trapped chasing price targets. That's not the smartest question to ask. The better question, the one that matters, is this: how likely is it that XRP outperforms most other crypto assets over the next 12 to 24 months? And when you strip out the hype and focus on the data, the fundamentals, and the macro setup, the case is hard to ignore. Let's walk it back. Ripple's legal battle with the SEC is nearing the endgame. And while there are still legal variables in play, one thing is becoming clear: XRP is being re-legitimized in the US financial system. If Ripple wins outright, or even secures a favorable settlement, it creates an open runway for American institutions to re-enter the XRP ecosystem without fear of regulatory backlash. Now zoom out. What happens when that institutional door opens? Capital flows in fast. ETF applications accelerate. Custodians, hedge funds, and asset managers who've been sitting on the sidelines due to regulatory fog finally get the green light. Liquidity deepens. Spreads tighten. And price discovery starts to reflect real capital, not just retail speculation. And that brings us to one of the biggest catalysts on the table right now: an XRP ETF. Yes, it's still speculative, but the whispers are growing louder. And with BlackRock, Fidelity, and other TradFi giants already opening the gates to crypto ETFs, Bitcoin first, Ethereum next, it's not insane to think that XRP could be next in line. Especially if the SEC is forced to concede XRP is not a security under current law. If an XRP spot ETF gets greenlit, even with modest inflows, it could unlock billions in passive exposure. That's not hopium. That's precedent. We've already seen what ETFs have done to Bitcoin's supply dynamics. XRP, being far more liquid with utility baked into its function, could move even faster under those conditions. And then there's the real-world engine behind all this, RippleNet. Every week, Ripple expands corridors. More banks, more PSPs, more real-time settlement partnerships across the globe, from Asia to the Middle East to LATAM. And XRP is the grease in that machine. It's not speculative. It's functional. It's moving value in the background while most people are distracted by meme coins and pump and dumps. So when we say a $5 to $7 price isn't moon math, we mean it. It's math based on infrastructure, demand, and liquidity scenarios that are already materializing. That range becomes even more reasonable when you factor in a post-lawsuit market structure where XRP gets listed across US exchanges without hesitation. Now let's zoom out further. The The $10 to $15 range? That's not just a dream scenario. That's a sentiment cycle driven by regulatory clarity, ETF inflows, and a macro environment where investors are rotating out of deadweight altcoins and into functional, battle-tested infrastructure assets. Combine that with AI-generated capital models that start pricing XRP into cross-border forecasts. You've got the makings of a supply squeeze. And yes, let's talk about the elephant, $27 XRP. Sounds ridiculous at first glance. But remember, this is crypto, where Dogecoin hit 74 cents on memes, where Solana ripped from $1 to $250 in under a year, where XRP itself hit $3.84 back in 2018, with no ETF, no US compliance framework, and far less adoption. So is $27 a certainty? No. Is it likely without major global integration? Unlikely. But is it possible in a black swan bull cycle where AI inflows, tokenized finance, ETF hype, and macro tailwinds converge at once? Yes. And we've seen stranger things happen. What's more important than the number is what it represents. It's not about the moonshot. It's about asymmetric opportunity. XRP is one of the few digital assets that still sits at the intersection of real utility, global finance, and regulatory evolution. It's not a hype chain. It's not built for Ponzonomics. It's built for liquidity plumbing, the rails of the next financial era. That's what makes this moment different. Because XRP isn't just back in the conversation. It's quietly becoming the conversation. And the market is only just beginning to notice. While most are chasing shiny layer 2s and degenerate DeFi farms, XRP is securing relationships with central banks, powering corridors for billion-dollar transactions, and positioning itself at the center of the tokenized finance revolution. So here's the final verdict. If you're already holding XRP, understand what you're holding. This isn't just another altcoin. This is infrastructure. This is policy-aligned. And it might finally be entering the phase where fundamentals and price begin to align. If you're just now paying attention, good. Because this may be the last accumulation phase before real institutional volume kicks in. And if you're skeptical, that's fine too. Smart money always enters when things are quiet, not when they're trending. But make no mistake, the game is changing. The rails are being rebuilt. And XRP is no longer on the fringe of crypto. It's sitting at the center of the regulatory, financial, and technological intersection that will define the next decade. So don't just watch from the sidelines. Subscribe to Be Crypto Smart. Stay 2 steps ahead. Because when XRP moves, it doesn't whisper. It roars. And if the AI, the data, and the fundamentals are even partially right, then this next leg up won't just be a rally. It'll be a reckoning.